Good afternoon, everyone. You are listening to the voice of Vision X, and today's date is Sunday, the 2nd of July, 2023. And you know how we do it every weekend. Depends on how the market is going every weekend. Let me say from Sunday, we try to go through the entire market and see whatever is happening before we can decide to know what our week is gonna be like. And before then, we should usually do some kind of ritual by going to our economic calendars and check whatever is happening. Today's video, um, I really want to, because trading has been seen like a very, very fearful, I guess it's fearful kind of, business, or should I call it kind of investment, because a lot of people rush into trading these days because they want to make money without really going through how these things really work, because you say you want to be a doctor and you don't want to go through the learning process. It does not work that way. So you want to be an engineer, you want to be a lawyer, you want to be a pilot, you usually take courses, time, days, months, years. Some courses takes over 5, 6, 10 years. Some courses take depends on what you're going to do. So today I'm going to go slow. So first of all, what I usually do, because I'm a market structure trader, and what I usually do is try to navigate in between these events. I get me likely, that might likely take away, um, like might likely, shake our structures we're trading. So if I'm to look at whatever is happening here right now, first of all, start with my economic calendars and look at important news that might shaking um, the market. So what I do is I come to investing.com, come to economic calendars, and try just to share whatever is going to happen in the market. And actually distract our structures. Are you getting me? So the first one we have on what's it called this week. Being starting from Monday, 3rd of July, there are holidays in Canada. So I'm just looking for the most important ones. The word we have this week is most important one, the one with three stars. We'll have a Germany PMI, and hold on, I'm coming to whatever we'll have this week again. I'm not seeing much event happening this week. Then we'll have the British pounds PMI happening 9:30 a.m. Nigerian time. Um, was it on what? Was date? Monday. Tuesday, we have the interest rate decision, and as you can see here, it's being forecasted that the Australian dollar, the Aussie RB interest rate will increase by 25 basis points, because the previous one is from 4.10%. So we are increasing by 4.25 basis points, which is not too hawkish. So look into it. I usually tell everybody listening to me, for us not to be very, very, you know, not to waste time. I would imply you that you go into this and look into whatever is happening, probably look for some fundamentals, why they are increasing by 25 basis point to 4.35 basis point. Is there any hawkish words from the Bank of RBA? That's where you look at also. So on Tuesday, the news as the Auxies are going to move very, very well. So I'm doing this video particularly for gold. I'll try and I'll touch gold very, very well, and just run through the rest of the asset that I trade normally. I guess, but this video is particularly for gold, and gold has been doing very perfectly well. So I'll be trading more gold as from I'll be dedicating my time trading gold this month of July more, because it's showing me a very clear direction than Euro, USD, pounds, and the rest of them, because it's giving me the kind of structures I trade. So what I do is look for structures. So it's routed on Tuesday, is around 5:30 a.m. Nigerian time, because I'm using West African time, Nigerian time. Then that's one news on Tuesday that might disrupt the structure in case I'm trading. What's it called? What's it called? In case I'm trading the Aussies or the Australian dollar, and Wednesday, we have the FOMC meeting minutes where uh, Powell will be talking about what's going to happen in their what's it called, interest rate decisions. Then on Thursday, the one very important is on Thursday we have the ATP non-farmer payroll, which happens at the first week of every month. Thursday we're having it. On Friday we have the initial jobless claim coming up, and the jobless claims that will be happening. These are days that your market disrupts. If you're in profit already, these are days you need to start take profit before they happen, so that they will not claim your loss. But if you are swinging for a week, 2 weeks, and you know your structure properly well and it's forming perfectly well for you, which will be going into any moment from now, you should know that this kind of days the dollar will dump because this is a jobless claim. So we have the service PMI coming up. This was 1:30 p.m. The New Year session. When New Year session is open, that's when you'll be having this ADP around 1 p.m., which is New Year session opening 15 minutes. Then I'll have a lot of distractions. So on Thursday, we might not be trading much in case we're scalping, or just doing normal day trading. Or our structures is take profit zone. We just take profit and go off the market and find a re-entry into the market. Except we're trading then on by 4:45 p.m. We'll have the service PMI coming up for the US also having, I think on Tuesday and Wednesday we're having the euro and the pounds PMIs. So these are events that usually the ISM is coming up also 3 p.m. 3 p.m. job opening. These things usually disrupt the market very well. So on Thursday we'll have a lot of news. So watch out for Thursday. The Thursday is what date? Thursday, 6th of July 2023. Watch out for those dates. If you don't want to trade, don't trade. If you don't have to trade, don't trade, except you are in serious profit already and you are, driving your structures and your structures are breaking and finding good support and resistance very well for you. So if you see that you're at a point where the market needs to, if you see that you're at a point where the market needs to, find what's it called, the support, or you're at a particular resistance and the news is happening and you're seeing that the news will actually come out negative to, maybe you're in the bullish trend and the news is coming out negatively, just take profit and find a re-entry again. Or if you know that your stop loss is safe and your entry is safe, just leave it to run if you're an extreme trader like me. So that's Thursday. On 5 o'clock, we have the crude oil inventories for people trading crude oil. Then on Friday, we don't have much. The major event that will be happening on Thursdays and Wednesdays. So a market structure trader, whatever is going to happen, I'm going to transfer it to gold right now. But before I jump into gold, I need to, there's a reason I said this training today will be a little bit, slow because this is very, very important going forward. And I want to explain why I said that I'll be trading gold much this month because gold is giving me a very, 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 very good vibes. Are you getting it? And it has been trending perfectly well. If you're following up my Telegram channel, you can see that we've been following gold up. It has been trending, and I'll prove to you today why I believe gold will be in a bullish run if some kind of things happen. So let me go into it. Read this with me. When you plan your trade well, when you plan your trades well, you will be 100% profitable. Knowing where you are going and what you are doing, I believe this is how great traders make their money. Taking their time to plan a trade of 200 to 1,000 pips. This market, as you can see, usually finds, they build in phases. Either they are moving to the downside in phases or they are moving to the upside in phases. And those phases are accumulation phases. So if you see a market trending to the upside, are you getting it? You should know, because that's why I usually tell it is everybody that has been, from my experience, I don't trend lower than the 4-hourly structures. I first of all look at my monthly for direction. Then I look at my weekly for my strong support and resistance levels where I want to get my trades from, as in, where I want a trade to the market to trend to see if it can break those support and resistance. Then on a daily, I use my daily to find my market structure. Are you getting it? Then I use my hourly to trend my market structure because no matter the fundamentals, when a structure is forming, it forms very well. So I, because of that, I brought in this strategy I gave myself, which I call it CEST. And what is the meaning of CEST? The first word on the C is condition. Now, what is condition? Condition, what is condition of the trade? Is that the market is the market is the market currently trending bullish or bearish? Here you have a shift to the upside, doing an ABC move, break, doing a higher high, higher low, higher high again. Then you can confirm that okay, this market is bullish, or doing a lower high, lower low, lower high, lower low again, which confirm that the market is bearish. And you can trend the market, you can trend the weekly chart, right? Getting it using the 4 hourly structures. What we mean by structure is that your lower highs, where your lower highs, where your lower lows, where your higher highs and where your higher lows for the bullish case scenario, for the bearish case scenario, lower highs, your lower lows, how they are trending to the downside, how you connect your dots. So is it that is it at the support level or resistance level? What are your moving averages saying? Is your RSI oversold or overbought? Always base your analysis starting from the 4-ish time frame. Lower time frame tends to fail. They tend to change character all the time just because they want to mimic whatever is happening in the fundamental news or the sentimental analysis, the greed levels, the fear levels, your FOD. Your FOD means your fear, uncertainty, and doubt levels. Those things usually happen on lower time frame, disrupting the market and the stretch, where the market makers tend to, find liquidities and take you out of the market because you believe that you are trading based on what you are seeing on the lower time frame. Yeah, well, that's what brings us back to the number two, which is the entry. Entry. Now you have to ask your questions, the conditions. Now, are all your conditions above met that we've asked, that I've been talking about just now? If you can rewind again, is the trade going to be a good trade? Those are questions you have to ask yourself. If all 5 conditions are met, then you are to enter the trade properly, knowing not not market execution. So you can wait. What I mean by not market execution means that you can set a buy limit or a sell limit at support and resistance. Let the market come to you. Don't rush the market. Wait for it to start from where you planned your entry. Don't FOMO. FOMO means fear of missing out. So you can see sometimes, maybe on Friday night, you see where gold was, from 1,900 deep about 1,920, and you are like seeing those bullish move happening, and you waited and waited. Let me just rush in. Don't FOMO. Wait for your market to come to you. You are more dangerous when you allow the market come to you. Are you getting it? So that's the entry. Then the S, it means stop loss. It is very, very, very important that you use your stop loss. Imagine you having a $1,000 account and you've planned the trade, you've known the condition of the trade already. Then you know where you want to enter from. This is the time where you now say, okay, I bring risk and money management in. Where is my what's it called? I have a $1,000 account or I have a $10,000 account. I want to risk just 1 or 2% on that position. I want to risk 5%. It depends on how good you see the structure forming or how good your grid level is. Most of the time, I use follow risk and money management, but most of the time I use up to 10% of my capital because I can't be having $1,000 knowing that I'll give in maybe 100 pips you stop loss on that trade and risking that means I'll be risking maybe $1,000 out of my I'll be risking $100 out of my 900 $1,000 knowing that I still have $900 left in case this one fails. I still need capital, enough capital. I still need to protect my capital for the other trade that I believe that I'll be working on, which I'll be willing for you right now. So your stop loss is very important. Are you getting it? The stop loss is you knowing that in case the trade goes wrong, you are losing just $100. So you have taken and accepted that loss already, even before it happened. That okay, I have $1,000. I'm taking a 1 to 4, a 1 to 5 risk to reward, meaning that I'm risking $100 to make $500 for a 1 to 5 risk to reward ratio. I'm risking $100 to make $400 for a 1 to 4 risk to reward ratio, $100 to make $300 for a 1 to 3 risk to reward ratio. I don't take more than less than 3 risk to reward ratio or 4 risk to reward ratio. Sometimes I go for even if I see proper structure, I go for probably 1 to 5, 1 to 10 risk to reward ratio. Because if I am taking 1 to three times is that equivalent to taking 1 to, 1 to 10 or 1 to 12, which is 4 trades in one. So if I can find a swing trade that can give me 1 to 10, 1 to 12, why stress myself trading and leaving an entry trades when I can see where the market is actually traveling to? Are you getting? So I tend to use my stop loss very well. That's why I use the word S, which means stop loss. This is most important. This is more important than entries. You can always enter a market at any time. What is the size of your account? What will you be willing to risk? Proper stop loss is not supposed to be more than 5% of your total account size, like what I just said. Use your ATR indicator to determine your stop loss. Always use 50 to 200 pip stop losses away from your entries areas to safeguard your trade. Now, a lot of people are getting this particular risk and money management part out. Are you getting? So a lot of people see me sometimes. I use 1 lot, I use 5 lot, I use 2 lots. Let me give you this example now. Let's say like I just said here, 50 to 200 pips. Let's say I have a trade right now. Are you getting? I have a good trade that is at $1,119 right now. Let me just say 1,920. And 20 to 1,920 to 1,900 is 200 pips. And I'm traveling to the upside. Are you getting it? 200 pips is like, maybe I'm using 1 lot, which is $2,000. And if I'm traveling to the upside up to like, probably, hold on, let me say I'm traveling to the upside, probably I'm risking 1,900, sorry, let me see something, 1,900, then I'm taking up to like I'm taking it up to like, to the next, what's it called? Let me just 8 risk to reward ratio. So if now I am saying I want to risk, I believe this trade might be going up to $2,063, where our previous high was, in case we're finding a support here, and I'll be talking about that later. This is a risk to reward ratio. Are you getting? So if I am taking from 920 to $2,060, which means that 920 to 2,000 first is 800 pips. Are you getting it? Then what's it called? 2,000 to 2,060 pips is under 600 pips, which is 1,400 pips from where it is right now. And I'm risking just 20 pips. Are you getting it? So if I have probably, let me say I have a $10,000 account, and I use 1 lot on this, risking $2,000 on this to make 1,000, see, okay, 1,400 pips that we saw right now to make $14,000. And this trade is going to take me a month or 2 or 3 months, and I'm sure that it's trending perfectly well. We should be trending. That means that I'm risking 200 pips on this trade. So if by a way I went to the lower time frames, like maybe the 4-hourly chart or the what's it called, the 1-hourly chart, and I see my structures, which I'll be talking about, and I see my structures that the trade came back to maybe 1,912 or 910, and I'm risking 200 pips normally, and I'm seeing that, okay, this trade stop loss has been reduced to, the market came down and found support maybe 1,910, which brings my what's it called, my 200 pips stop loss to 100 pips. Instead of me still continuing with the 1 lot size, I will reduce my risk. I will now reduce my stop loss back to 100 and increase my lot size to 2 instead of 1. So instead of making $14,000 on this trade, I'll be making $28,000 on this trade, because I've now reduced my stop loss to 100 pips, because I've calculated my trade properly, where that good, if it continues this way, might not come down more than 1,910 instead of 1,900. Are you getting? So you knowing this does not mean, you increasing your lot size does not mean that you're not observing risk and money management, because it shows that if you see that it's just 50 pips instead of that one, 50 pips, and I had 200 pips in play, like I want to raise $2,000 out of my $10,000 account, I have 50 pips. Now I have 50 pips stop loss. I'm sure that it will not. I will rather increase my my lot size to 5, because maybe just say, let me say 4, because if truly I'm risking 200 pips, I've increased my lot size. Is now, if I increase to 4, I'm still risking the same 200 pips. If I increase to 2, I'm still risking the $200, $2,000. If I increase to 4 and it's 50 pips, I'm still risking the $2,000. If I'm using 1 just because I don't want to get caught out, depends on my grid level. That is what is called risk and money management. So your risk and money management does not mean that you must use 0.01 all through. It depends on what you are seeing when you are looking at lower time frame and you are seeing your support and resistance hold. So if I could take this trade right now and they maybe I'm risking I have $10,000 account and I'm saying maybe 100 pips. If this plays out, it, if and I used to I use only 100 what's it called 1,900. I entered from 1,910 and I 910 actually, and I put 100 pips stop loss and I used to load. That's a $28,000 profit in case it comes back to all the way to the needs all-time high again. In case it breaks and continue breaking and coming back all the way to this all-time high, that's $28,000. For a $10,000 account, I make it $28,000 in 3 months. As an investor, that's very, very perfect. And that's how I look at my market, and I don't fall. So that is where my stop loss comes in because I've planned my trade even before what it happens. I get it. So the third one, okay, let me come again. Always use 50 to 100 pips in stop loss away from your entire trading area to safeguard your trade. Depends. I just explained how I was able to get an 8 risk to reward ratio trade for you here. And so this is what I have for you here. Then the take profit slash target. The T is from the CEST is take targets like take profit. There's nothing such as greediness in trading. Always employ your Fibonacci tools to determine where your trade might be going after a break and with test of your Fibonacci levels. Use the trend-based extension Fibonacci levels to determine where your trade might be going to. Most likely to 0.618 trend extension level, 0.786 level. Once you can meet all your criteria above, you are not supposed you are not just a trader, but a profitable trader. Above all, patience is key. Always wait for the best setup. So we'll take this out of this picture. We'll take this out and probably, enter into these markets properly. So my chart is loading, so just be patient with me. So we'll take all these things out, and probably what I'll do is just, what I do every weekend is I don't care what I've done previous week. I've not repaid again. I'll just delete everything and go back entirely for my sanity again. So what I usually do, I come to the monthly time frame to find out whatever is happening. As you can see, gold is having these 3 liquidities on the monthly, starting from 20th of starting from 2020 all the way to right now. Gold has been trying to break above and find massive rejection from 2020, massive rejection for 2022 again, now 2023 massive rejection. So with that being said, what has gold been doing all these years when it started happening? Gold is actually in an uptrend to me because of this bullish momentum coming here to find resistance again. So I'm seeing gold in a bullish mode, so I always want to buy more than selling. I get it. So when you come to the weekly is showing you can't judge based on the monthly. You just need the monthly. Meaning a lot of people don't come to the monthly, but it's very, very important that you come to the monthly of any asset you're trading. So when you come to the weekly, you now start seeing some kind of important areas of value. I guess what do I mean by areas of value? An area of value is where I find more than 2 or 3 touches of your support and resistance. I can call that an area of value, but it's not too valid. So what has been happening if I trade this market, I can see that gold is actually in an option for me. But I will not just trend down. I will just show you how I draw my using not just support and resistance. I use supply and demand more than my support and resistance. From what you can see here on the immediate short time from the year 2020, you can see that we had go do this. So if I can play my two, go do this, break to the upside, changing character from this lower, because the market, okay, hold on, let me take this out. It's important. Follow. Let's start from this place. Follow. Very, very, very important. This part is very important. You have to be very, 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 very vigilant here. This market was actually doing a lower low, higher, lower high, lower low, lower high, lower low, and post here. Are you getting it? Which we had a triple bottom on the 4-hourly chart. I think I'll show you that. Then after that, this was our last lower high. So I would say that this is my weekly watch. This was my weekly supply zone that brought this market to the downside. If truly this is a broken structure to the downside, we'll find out. So when that happened, are you getting it? And whenever a structure breaks, what happens? The market has done change character to the upside. So there was a change of character here on the weekly. Are you getting it? So what happened was that the market actually extended instead of falling down. The market actually extended and found supply. Wash and do what? Found supply. So when the market found supply from this area, I guess it actually came down. But this broken structure turned into a new support. This particular broken structure turned to a new what? A new support. And it even gave me an area of value. So this was my most important area of value. And I think I told everybody that whenever, what happens when you get to an area of value, we found a bullish reversal chart pattern, like a reversal candlestick pattern to the upside, which is this one. What is this? A bullish engulfing candle, which tried coming back. If we come to the lower, we'll go to lower time frame. But let's first of all get our facts clear. Because this market was on a downtrend, but when it got to this supply, it found a bearish, a rejection back to the lower side, and even found support. This was previous resistance, support, now turned resistance, now turned, broke and turned, broke the resistance again and turned support. So to me, I would say that gold is currently bullish. And how do you know it's currently bullish? Because when after finding support here, it came back and broke supply, broke this supply. So after breaking that supply, what happens? Remember what I tell you. After each and every break of structure, what happens? The market tends to come back and find, solace, or probably, let me just say, okay, there was a break of structure here. So I'm trying to drive the weekly market structure. So that was a break of structure to the upside. Again, I guess it. So what the market is doing right now is just probably coming back to weekly support level. So this is a weekly demand zone. So are we coming all the way to $1,800 area? We'll find out. We're not seeing anything clearly. The weekly chart, what we then do is coming back, knowing that we have important area of value of $1,800 area. We'll come down to the lower time frame to find out what has happened. So you can see very clearly that the more you drop down, the more the structures are clearer to use. When we drop to the lower time frame, like what I said before, what you see here, a triple bottom. And we had the first one, we had the second one. The market got exhausted. So let me just drive. So let me use brush. We have the first one, we have the second one, we have the third one. When the market was actually doing lower low, finding support and resistance, came back, found resistance here, and came down. And immediately we broke. What happened? Like we did on the weekly time frame, we found an entry for 0.38 to Fibonacci trend extension level. Knowing that, take this home today. Just be jotting the important things I'm stating out of this market down. Whenever the market breaks, whenever a market breaks and change character back to the upside, take this home. The first change of character usually happens and sometimes don't travel up to even 0.5 Fibonacci retracement level. I'm not going to do a flip. This is not a lecture. What's it called? This is not a training class. This is just an analysis class. So I'll not speak much. But take this on either 0.3 or 0.382 retracement level on the first change of character that happens. Are you getting? So if this is a change of character, how then do you think that we'll not find a support when it just did a 0.382 and even breaking structures to the upside and trending? So I saw that during this period, I saw that the market will just consolidate, and broke above this previous support and resistance area of value, which was even giving us a bullish, you know, a bullish vibe, not breaking any structure, successfully broke, and we tested on maybe the 2 hourly chart. You see this retest. I entered this trade from 1,025. Go and check I think this should be my January 5th video or December 5th, December video, something like that. Use December 2023 video, January 2023 video. You see this. Here I saw was even coming back down here. There is something I need to bring into your attention today. Take this on today. Let me bring this into your attention today. Gold does just this sort of patterns. W and M pattern is very common with gold. Very common with gold. You are saying it. Very common with gold. Very common with gold. Very common. Very common. Trust me, very common with gold. Take this on today. Very common with gold. Look at it. Very common with gold. So these are things I look at also. So if before you start training an asset, have you done a proper study of that asset and how it behaves? If no, follow this particular training class. It's very important that you understand an asset before you trade it, because a lot of people are saying that, oh, gold is too fast. Yes, gold is very liquid. It's one of the most liquid assets aside from Bitcoin, aside from NASDAQ, aside from US30 and S&P 500. Gold is one of the most liquid assets in the metal industry. In the metal, what's it called, asset. So, and it's trending perfectly well. Now, from what we have done from the weekly time frame to the daily time frame, don't get carried away. Don't get carried away, because if you really know what price action means, price actions are your short continuation patterns. It will always tell you whatever it wants to do. And if W pattern, M patterns are common with gold, which means gold loves what? Loves this double bottom case scenario and fake out. Are you getting it? It loves this double top case scenario and fake out, because this was a fake out. Probably I'll go to the lower time frame to show you what I mean by that. But this is a daily time frame, so I don't go less than the 4-hourly time frame to trade less than the 4-hourly time frame structures, because this is where it gets serious, especially an asset like gold. So if this market was in a downtrend and found that the sellers were unable to break down, we came back again, we were unable to break down, and we came down again, we were unable to break down, breaking above again. You see that it was just a little retracement. Gold is known for bullish moves. So this was to tell me that the market is now out of what? Sellers are no longer in the market, and the market is exhausted already, and it has even switched to the upside. So if I've taken this trade from here, there is no point leaving until we break another structure again, we test again, and started going again. So gold was seriously bullish, and a lot of people were trying to, short the market. Why short a trending market? Are you getting into the upside where it has switched to the upside already and is going? So these are things you look out for whenever you are trading an asset like gold. M patterns, MW patterns, double top, double bottoms, triple bottoms, fake outs. Watch out for your fake outs. Are you getting it? If truly a market has broken, and watch out for your consolidations. Look at this market. We are trending perfectly well to your favor. This is a bearish continuation pattern to the downside, but instead it broke an area on a higher time frame and found support on that area. You leave it to continue trending until you see it break construction on the Farley chart again. Then you can, watch whatever is happening in price action and continue trending the market to the downside, knowing that will come down to an important area of value again, which you have on your higher. Don't get carried away. Always rule this out. We got here and we found support again on those areas. Go back, you start seeing them. You found support again on those areas and it bounced and came down, couldn't break down again and found this. Just enter, use a proper risk management. If it would even take you that you're using one lot before and you are seeing about 1,000 pips, instead of using that one lot, go to 0.1 lot and risk 1,000 pips, knowing that you might not find an entry into this trade again until you get here. So from even 0.1 lot from 1,860 to 1,950, that's over 1,000 pips again. That's over $1,000, $1,000. Instead of you wasting this whole move, you can reduce your risk. Instead of 100 p.m. one lot, you are using one lot and you are risking just 1,000, 100 pips, and you are seeing that this market has broken and it's not giving you an entry. You can as well reduce your risk from one lot to 0.1 lot, make you have 1,000 pips stop loss, which might have given you under 1,000 pips again, knowing that instead of you waiting, you would have been able to take profit here and gotten $1,000 into that market. So your risk and money management game must be, seriously tight, very, very tight, because this is the Farley chart right now. And since then, what has been happening? Let's go back to the daily chart. Since then, what has been happening? Gold came back from this supply zone we had on the weekly and broke that supply to the upside again. So for us to break that support to the upside again, it's giving me what? A bullish vibe, because after every reconstruction, what happens? If you don't know how to trade this, you wait for the market to do what? Come back to, a Fibonacci retracement level again, because this was our last, major higher low, your last major low, and this was your last major high. So whatever I'm looking for right now is employing my Fibonacci retracement level, which is 50%. So when I brought this Fibonacci retracement level, before I will use Fibonacci retracement levels, let me teach you something else. Follow up. A market that actually wanted to break to the downside, are you guessing it? Should not be doing this sluggish movement. When it gets here, I want to see some kind of big red candles happening, big red candles happening, like this sort of candles. That's when it will be giving me like, okay, today it's sold, then tomorrow it's sold again. So sentiment analysis will tell you that you don't need to go look for sentiment analysis. It's telling you here already. If truly, hold on, well, I'm getting somewhere. I'm getting why I'm getting to tell you why I'm bullish on gold from here we are right now. Why I'm bullish on gold? Because I do what? I follow price action. Because after this break of structure, why was the market in a sluggish move? When we get to these areas and we're finding this support again, sorry, this resistance again, be worried. Why is this on a bullish move? Why is it not trading the way, moving the way it moved in these two places? Why was it in a bullish move? So if I have taken profit from here and I saw this consolidation and I'm seeing those BB rejections candle, red rejection candles again, I would not buy again, knowing that we might also switch to back to the downside. So it's important. The most important tool I have in this my trading journey is not just as a market structure trader, it's my change of character. I don't enter a market unless I see a change of character and my price action. Now, truly, if this market was supposed to, after breaking this 1 week supply and it does not want to go back up to $2,060 to even $2,200, $2,200, why is it moving sluggishly? When you see a market moving this sluggishly, that's to tell you that even though it's a daily chart, the sluggishness is too much. The market might just find support at probably, okay, we've this market was too expensive after breaking the structure. So buyers were not too much into this market because they are not interested. They are just trying to move the market to see if you can find a way to break this particular, what's it called, week on the weekly, because this are weak on the weekly. We couldn't break it. So it definitely need to do a retracement, and a retracement in the market is just either people taking profits or the market trying to, give a discount zone. And what can you see? The market has reversed all the way to 0.3. Now, let me give you, I believe I've given a lot of strategies out that I might have not mentioned. Now, I've given you this sluggish movement, the market breaking structure to the upside, and doing retracement. And what are retracement? Retracement don't usually come in big reds. It doesn't usually come in big. Retracement are sluggish, like what you are seeing right now, to continue this market to the upside. Is it coming back to a Fibonacci kill zone? Is there anything showing there that this market might actually reverse to the upside? Now, let me give you another strategy now. Like I explained for Bitcoin, if I can bring Bitcoin in, how I was able to, trend this market all the way from, hold on, and bring Bitcoin in. Or just go and watch my June 2nd, June 3rd, June 4th video on Bitcoin. Bitcoin actually did what's it called right now? Bitcoin actually did what gold is about doing right now. Are you getting it? So let me give you the strategy again. Look at this structure. What actually causes break of structure was here, not here. So there were two things that caused the break of structure. This was where just look for a negative candle from the, if it's a downtrend, look for a green candle inside these places. There is another block there. Do you know why I said that? Let me go to the 2 hours and show you what I mean by that. Hold on. Let me go back to the daily. You see this place you are seeing here? You see that it might be a little red candle. It's not just little. Go back to your 2 hourly chart and see whatever happened there. This was a demand zone because after this market actually came to the downside, this was where this higher move started. This was where all the move actually did what started from. So if that's where the move actually started from, I would say that this is a very good demand zone for me, which might actually break to the main support support. I'll put this as a main demand zone and say that the market, this is going to be a liquidity Sunday, which if you look at it, you've taken that liquidity. So if that is actually a very good demand zone, are you getting it? Let's go back to our daily right now. I've put a demand zone then, assuming I was there on March 13 to March 21st, March 13 to March 21st. I put a demand zone there. Are you getting it? So if this thing can load and don't disgrace us, if the network can load and don't disgrace us, so that we can continue further, I'll show you something else. Hold on, please. Load. Yeah. Dual network, and seriously. So probably I'll just reload. See if we can give us back. I'll just reload. Hold on. Okay. So this is a demand zone for me. And this is on that major demand zone right now. So if the market is going to bounce from there, don't get carried away. Don't get carried away. Don't get carried away. Hold on. Don't get carried away. Don't get carried away. I'm coming. Don't get carried away. Let's go back. Okay. If this is actually demand zone, let me show you something now. Trust me. See, There are a lot of things you guys are not doing. There are a lot of things you guys are not doing. You don't expect me to be buying from. Should I bring something in? Okay, look at, I will not run MACD. Are you getting? But I'll use my RSI instead. I want to buy when the market is overbought, and I want to sell when the market is oversold. So if you have sold from here, market was oversold. Are you getting it? If you had bought from here, the market was overbought. So there are a lot of things you can use as criteria to determine how your market actually does what work. So from here now, I don't play with what my price action patterns. These are my chart patterns. So from here now, I had a double bottom, which is a bullish reversal chart pattern. Are you getting it? Then we had a double top, which is a bearish reversal chart pattern. Because how do you know a double top happens? When this one is broken, and we did a change of character to the upside. How do you know that this is a double top? When the previous low is broken, then we change character to the downside and found support. So let me drive the immediate price action for you now. This is the most important part. So if you have watched to this extent, congratulations, because a lot of people do not have patience to watch this particular video up to this extent. So we're going to stand and go to our 4-hourly chart, because I love using my 4-hourly chart to drive my market, knowing that this was a break of structure on the downside, the change of current side. This was our recent most important, as in, let me just say, this was an order block area where price action actually started that broke this, because even though this one market actually come all the way to this place and stop, but usually just make sure that find out where the price actually broke from. Name it a demand zone. If the price start finding demand, you will know. Now let me employ more strategies. Now listen, if this is a double top, you will know. And until that double top, it is actually a double top, so I can say double top. Now, that was actually a double top. How do you know? Wait until the lower structure is, as in lower, the low is broken. Until that low is broken, this is not a double top. So even though you are seeing this internal structures happening, the market has been trending perfectly well. Now, has it not been trending perfectly well? Look. Now, if you are ever confused, like this was the last low you had. After this low, the market actually went up, came down, came up again, couldn't break, came down, couldn't break down, came up again, and broke this. So if that is the case, just connect your dots. Connect your dots. You would have seen something sweet there, knowing that this have given you what? An ascending triangle that broke to the upside, retested and broke again. So you'd have found an entry here, took profit here, or use a Fibonacci trend extension to know where the market is actually going to. Because if this market actually broke to the upside, it came down to 0.5 and 0.618. I call it a Q zone. Take a trade and trend it back to the upside using your Fibonacci trend extension level. So from here to here, structures to here, we have taken profit exactly $20,000, $46, $40. Would have given you a 1980 to $20,000, $46. That is about 200 pips plus 400 pips, 600 pips to the upside. A one lot would have given you about what's it called? $6,000. You risking just 1,000, maybe 100 pips to the downside from 1980 to 1970. Are you getting it? You would have made about 1 to 6 risk to reward ratio on this trade. So find a way to connect your dots, knowing what is happening in your 4-hourly time frame. So on the 4-hourly time frame, we saw that the market actually did what? After going to the upside, market actually did what? Look, broke structure to the upside, and this was the last low. So if we draw this here, this was liquidity, came back and took liquidity. Whenever you find a week, while I watch my other videos, I can't do much about that here. This was liquidity. And the market did was, to me, the market broke to the downside. So it was a change of character. But is it a fixed change of character? We'll soon find out. That was where I said, okay, after my 2 touches, now take this home again, jot this down again. Don't use 2 touches to determine where your market is going to. Wait for a 3rd touch. So this was the 3rd touch I was looking for. So I just extended this line down. Are you getting? Knowing that if this was a change of character to the downside, that means we need to break down and retest and continue going down. Using here, it didn't happen. Well, what happened instead? If you were wise during this consolidation phase and you really know what you were doing, you would have known that this was a liquidity trend line. Go and look from my what's it called? From my March analysis all the way down here, I drew this and called this what? Liquidity trend line. I call this liquidity that any day will break below it. That is liquidity for me. Now watch, let me remove that now. Let me remove this. And I put that trend line there. Then what happened again? I connected my dots down again and say that this. I connected this dot down and I connected this. Knowing that if we get exhausted here, the market will show me whatever it wants to do. And when we go here, you saw that we found resistance in this last higher high again. Are you getting it? Giving us 2, then broke down, broke structure, came back to a test, we couldn't break it, then we broke down again. Are you getting it? And couldn't break up, continue to the upside. Instead, we broke down and even broke perfectly well with a perfect break, a 4-hourly perfect break, or probably a daily break of this trend line. So whatever I want to see at these major breaks. So after this break, what happens? After this break out of this ascending triangle, now this formed what? A chart pattern. Wait for your chart patterns to form before doing what? Trading. So we broke out of this. So the market has actually been telling you to wait and wait and wait, but you don't listen. So if this was actually what happened, we now have what? Another area of value is support turned resistance, resistance, resistance. So the market is actually bearish, coming to a bullish demand zone. Watch. Now, if this was a resistance, we were trying to also find supports here where we have multiple touches. So don't get carried away. This is the most important part right now. This is the most important part right now. If this is actually a valid local, if this is actually a valid, if this one from the downside, this 19,900 area is actually a valid demand, trust me, wait for it to break above this previous support. And retest before you enter a buy to the upside. Because this market might actually just come back here and find $1,940 area. Are you getting it on gold? And find resistance. If you find, and you start seeing your shifts on the 15 minutes or 30 minutes time frame like this, take a sell, put your stop loss above here, and sell it down to 1,880 or sell it down to $1,900 or the previous low. This is what I'm looking for right now. This is what I'm looking at right now. So if you wait for your market to always come to you and you are not FOMOing, trust me, you will always be right. So 2 things you should take on today. Your change of character is the most important tool. Your Fibonacci is the next. Are you getting it? Because if this was a break of structure to the downside, wait, let me mention everything. See the tools you are going to use, the confluences you are going to use. first of all, a change of character happening. Are you getting it on any of your time frame? But don't take less than 4 hours change your character, or you 1 hour change your character. Depends. You can scalp that, or you can trade that. To trade the 1 hour and 1 hourly time frame structures, or then change your character, then break and retest of your short patterns. That's your price action patterns, your short patterns. You always wait for change your character and your short patterns to happen. Then your Fibonacci tools is your most important tools again to determine where the market is actually coming to and where it's going to. Are you getting it? Because from the daily time frame right now, let's go back to the daily time frame. What we are waiting for? We are waiting for the market to actually come, number one, to an opposite candle or an order block area on the lower time frame, which is the 2-hourly time frame we talked about. And this is a break of structure to the upside. So the market needs to actually do what? A retracement from that break of structure. The market actually need to do a retracement. So maybe a Fibonacci Q zone, which it has done a retracement to 0.618 retracement levels. So if this is a valid demand, we need to break above $1,940 area. We test it, then I can enter from 1,940 to the upside. Because if we get to 1,940 and we are seeing a bearish vibe, this market might actually just come back here. Then if we come here to find support, remember what the market actually does. It actually does what? A double bottom or a double top. So if we should take a trade down again, if you are seeing a shift in lower time frame, are you getting it? Take profit. If it breaks, you know that this what's it called? This order block area has been validated. Then we test out that block, come to our $1,800 support, or you can actually come to our last discount zone of 0.786 and do a fake out and continue going. Remember what I tell you, a W pattern like this or an M pattern like this, that's what gold usually does. So whatever I'm looking for right now are these scenarios I've just told you right now. We're finding a bounce and we're trying to switch back to the upside. But until the market actually does what? Break above. So if I take this Fibonacci off, break above this, turning this whole area to a fake out, and we test, then we can take a trade from here, a conservative trade from 1,940 to 1,980, 400 pips. Then you can throw everything you have at it then, because the market has actually switch to the upside, because it's going to give you a bullish continuation pattern to 0.386 retracement levels. Are you getting it? Because every switch back from a downtrend on an uptrend, don't retrace up to like 0.5 is usually good. So follow up. I would re-upload that gold pattern, how gold actually works, a journal back again after this video so that you can watch whatever is happening. So 3 scenarios that's going to happen on gold starting this week, starting from the 3rd of July, is gold coming to 1,940 and finding supplies. Are you getting it? Switching probably on the 30 minutes time frame, switching back to the downside, changing character to the downside, put your stop loss above there and take it to the as in our demand zone again. If you can hold, then we'll do a change of character, then we test and continue going, or break above it because we are in a demand zone and a daily time frame 0.6 Fibonacci retracement Q zone. You start seeing it will show you, it will never lie to you. You start seeing those green candles that yes, this market, you start seeing the banks jumping in, government jumping in, market makers jumping in. Don't judge based on what you see here already. Are you getting it? Because let me show you something else again. The market is not supposed to stop at 0.382 retracement levels. Any market you are trading, don't let the market must pass through to a Fibonacci Q zone before retracing to the downside. So if you find support again, then we can take this market and continue going. So my best bet right now, gold does not misbehave. You are thinking it's misbehaving and it's true. You don't know what is happening. It does not misbehave because on the 1 hour time frame, if you watch my analysis, you see where I saw gold switching to the upside here. So if gold can actually come, like I said from 1910 area, from the very first, what's it called? Gold actually did what? Did a head and shoulders pattern. The market will never lie to you now. So if you come and retest, are you getting it? If it's finding 1 hour supplies, so the market is actually just showing you, if you know how to trade structures, the market has actually been telling you what is happening. This is a 1 hour supply. So if you find the supply here, if you find the 1 hour supply, which I know that if it's a bullish market, it will break the 1 hour supply to the 4 hourly supply. Are you getting it? If you find supply around here or the 0.382, are you getting it, or 0.5, then to come and retest these demand zones, 1 hour demand zones. If you can retest wait now, I'm not just assuming, I'm telling you how market structure actually work. But this market was actually supposed to come back to this demand zone. Are you getting it? If it's actually broke out, change character to the upside on a 1 hourly time frame, come back to this demand zone or a Fibonacci retracement zone. Now let's even run through. Let's say this is our last low and this is what is happening in the market. The market is actually supposed to come back to 0.382 or 0.5 or this previous resistance now turns support. You cannot see how the market trends and continue to do. Also, if you take a trade from here, from 1910 and put your stop loss below 1,900, I guess, let me say 1,900 or 1,910, that's 100 pips, and take a 400 pips to the 300 pips to the upside, I guess it will take you back to this 4-hourly time frame kill zones. I guess it. So just follow structures, because this is still on the higher time frame, is still bearish, which might still take us down. But overall, don't confuse yourself. Overall, I don't just look at the lower time frame because I'm not a day trader or a scalper. I'm a swing trader. That's why you see me always being on my 4-hourly structures. I getting it to determine what is happening in the market. So I'd rather follow my 4-hourly structures than follow my lower time frame structures that might switch on me. You can see that when I was doing the 1-hourly structure right now, it was just telling me, do here, do this, or anything I use, anything I'm saying, but I don't like it. But I don't like it. That's why you see me sticking to my 4-hourly time frame structures, because my 4-hourly time frame structures has been doing what? Trending perfectly well. Perfectly well. So I'm slow in explaining how structures actually work, using gold as a case study, and you can see that gold has been working perfectly well if you'll be waiting for your resistance on your 4-hourly time frames and your 4-hourly time frame resistance or your 4-hourly time frame support, you would have been cashing up to 100 to 200 or 300 pips. I even trading these from here to here is about 400 pips. From here to here is about 200 and something, 250 pips. Like that, you would have been cashing and using even before it will fail you here, knowing that you have got 1, 2, 3, 4 trades. So even though it failed you here, 100 pips to the downside, you would have killed your over 4 trades you have of 250 pips times 3, or 250 pips times 3. That's about 750 pips. So remove 100 pips that would have caught you here, you would have still made about 650 pips. So follow your 4-hourly time frame structures, because your lower time frame structures tends to fail. So I'll be watching out for my 4-hourly time frames, and if this is really going to happen and take us up here and break and continue, or anything that is going to happen internally, I'm not going to look at my lower time frame structures. I just want to follow my 4-hourly time frame structure. So I'll be waiting patiently for this, or this to happen, or it should break and find a retest again and continue to the downside. I guess so. these are your case scenarios. So stick to your 4 hourly time frame structures, because if you have been sticking to your 4 hourly time frame structures, you would have been in profit all this while, knowing that you would have just made fewer losses and bigger profit, because this market was actually trending on your price action pattern, either on your, what's it called? Because you would have taken a trade from here, taking profit, taking a trade from here, taking profit, taking a trade from here, taking profit. And you'd have maybe taken a trade from here, stop loss, but knowing that the market is actually trending in this ascend triangle, you've had 2 touches of extended, you are taking another trade from here and taking over 1,950 to 2,050 is 1,000 pips. Then selling on this change your character retest again, selling from 2,000 all the way to $1945 area, which you took here, and we made huge, massive profit because that switched to the downside. And there's not everything I can explain here. So if this is a valid demand zone, break this, retest, and continue this market to the upside. If this is not a valid, conclusively, if this is a valid demand zone, it will break and fake out, retest it, and continue to the upside. But if it's not a valid demand zone, it should come back and find resistance and break down, testing that zone, coming to our major demand zone before finding a way to shift again, change your character, test demand again, continue to the upside. So this is all I have for you. I will not go more than this because this video has been too long. Probably I'll do 3 videos on Euro USD trade, Euro USD market, and how it has been trending. I'm looking for I'm looking for this bullish continuation pattern to the upside, or the JPUSD. I'm looking for a continuation pattern. This resistance is finding right now 3 touches. Always wait for 3 touches. So if it breaks up, I guess it and breaks this previous lower high, broken. So if we're coming back to test what caused the break of structure and our trend line, 2 confirmations we can enter. Or it can just do what? Break down this broken, what is this, consolidation, or what a W pattern break, test, and continuation. So just wait, always wait for your structural levels or your what's it called? Or your AUD USD trade. What are you seeing on AUD USD? Look at your chart patterns are perfectly showing what you to do. Because if it's truly a break of structure on the 1 hour time frame, we test it and it's not breaking, giving us a bullish vibe, a bullish candlestick pattern, you can take it to the next supply zone. Or if it breaks down, break structure well, retest, and continue going down. So your chart patterns are there to guide you. You are the one that does not want to wait. Your chart patterns and your support and resistance levels, you change your characters, are what they are there to guide you. So these markets are never wrong. This market was never wrong. You are the one that has been feeling what to analyze the market correctly. So let me go to the BTC USDT chart. If you can watch my Bitcoin November, June 1st, June 2nd, 3rd, or 4th video. I think I uploaded a video on those dates where I was able to see how Bitcoin is trending. Okay, look at the same thing now. See what happened. The same thing I'm about telling you right now. Look at it. Are you seeing it? Are you seeing it? Bring your Fibonacci retracement tools in. Look at it. Are you seeing it? Came into our Q zone. What happened? We found demand and we were able to break the structure back to the upside. Are you getting it? So if I should take all these things off, look at something. Same thing happening on gold right now. Same thing happening on gold right now. So if I can put a trend line to it, you can see that gold is actually in what? What is this? What is this? That's on that case scenario again. this is a falling wedge. This is a falling wedge and it's a bullish continuation pattern. So if I'm to take this and bring this particular rectangle back, gold just needs to do what? Break out of this wedge on that strategy again, retest the wedge and continue to the upside. So there are a lot of ways you can look at your market. Or come and retest this wedge and find a resistance and break down. Are you getting it? Probably do a fake out again and break, doing probably doing what? Probably a head and shoulders pattern back to the upside. Being the left shoulder, being the right shoulder, being the head, sorry, being the right shoulder, and breaking, retesting, and continue going. So there are a lot of ways you can look into the market. I have a lot of strategies I use, looking into this market. Because if this is what Bitcoin did and was able to escape, wash. Same thing. Bitcoin did a sluggish move. How? Because this was actually what? A head and shoulders pattern break. Look at. Left shoulder, head, right shoulder, break, and sluggishly did not come boom, boom, boom. Sluggishly, because if we actually found, if this market was actually going to break, it will not come with a slow pace, to come with a BB candles. So it broke. Now, what actually happened when it was retesting this head and shoulders pattern, coming to a Fibonacci retracement kill zone, perfectly aligning with what the kill zone, perfectly aligning with this confluence also, as is happening on gold right now. Are you getting it? And finding if it can break above, break out of that falling wedge and retest it, that's a continuation to the upside. So if I can find 1940, I'm taking probably a 5 lot to 2040 again. 1,000 pips is about 100K. One lot is about 40K. No, one lot on 1,000 pips, 10K. So no fundamentals can, destroy this particular pattern, because if this was actually happened, you can see the same thing happened on Bitcoin also. And what is it? Connect your dots. Connect your dots. What actually happened? Just connect your dots. See? So if I come to my file, you see it clearly well. Just connect your markets, connect your dots. The market was actually building perfectly well, finding you support and resistance, finding you good areas to trade from, taking 1,000, 100, 200 pips. Because if you had bought from here, you would have sold from here. If you had bought from here, you would have sold from here. You would have known that this is liquidity and this is liquidity to sell down to break structure. Come up here, then come to our Q zone, broke out of it, and we didn't even do proper even break and retest. Instead, I took my trade from 25,000 here right now. I'll watch that video. First week June video on Bitcoin is in my YouTube channel, is there. So I believe this is what I'll be looking out for gold. The break out of this falling wedge and retest, or break down from these demand zone. I get in it and retest it and come to a major 1,800. So this will be my 2 trades, 1,000 pips to the downside, 1,000 pips to the upside. My 2 swing trades I'm waiting for right now. So this is where I'll be stopping for now. You can wash over and over again. I get in it to get all your buyers right. Follow your structures, follow the value structures. Gold has been trending perfectly well on the fall. Trust me. It has been trending perfectly well on the fall. Perfectly well on the fall. You are the one that is not seeing it. This was a previous support, now turn resistance, trending perfectly well for you. So if I am to even trade or even say, okay, yeah, I should even day trade, these will be my areas where I'm taking profit from. Then if I break up, we test, I'll enter 1940 again, put probably 200 pips to 1920 and take profit at 1980. That's under 400 pips to the upside. Are you getting it? Definitely, we'll definitely find resistance in these areas. We'll definitely find resistance and break it. Then come here, find resistance, come down a bit and break it. Find the resistance, enter from 1980 again to 2050. That's under 700 pips. Or leave it to run all the way to that next resistance, knowing that if actually this is what gold is going to do, I guess come back to your daily time frame and say that, okay, if truly that's what gold is going to do, bring a Fibonacci trend extension in to tell you where gold is going to. If you're retracing from 0.618, gold is actually coming to first take profit 0.618 or coming to 0.786 $2,100 area. So trending from 1,900 or 1,910 all the way here. Do you know how many thousand pips? Let me trend it for you, sir. Let me bring the price range. So all the way from 1920 right now. Let me say, okay, 1920. Trend it all the way here. That's over 18,000 pips to the upside. A 0.1 lot will give you $1,800. A 1 lot will give you $18,000. A 10 lot will give you $180,000. A 5 lot will give you, calculate that for yourself, $90,000. A 2 lot size will give you $36,000. So depends on how you look at your market. That's how the market works for you. But for me, I will take it up to where? Take it up to the next resistance, 0.618. So if I take it up to 0.618 from where we are right now, it's actually 14,000 pips. That's 1,460 pips to the upside. So if I'm using 1,000, if I'm trying to earn 1,600 pips, 1,400 pips to the upside, and I'm even using a 400 pips, I calculate my pips, and I'm even using a 400 pips to the downside, which will bring me back to 1,870, risking $400 on this trade 0.1 to make $1,400. And I have maybe a $400. It's not, it's even, let me just say $400,000, a $400 or a $4,000 on my $10,000 account. I'm risking 4,000, that which is too much. Or I have a $50,000 account. I'm risking $4,000 out of it, which is 4% of my account. Are you getting it? To make over $14,000. Even if it takes 2 months, it's a good trade. So get your facts right. Know your structures. Know your support and resistance. Internal support and resistance. External support, as in internal support and resistance, and your higher time frame. Follow your higher time frame. Don't trend more than the 4-hourly structures. You can take trades from the 1-hourly structures, but be very, very fast and don't be greedy. Don't be greedy because your 4-hourly time frame has already given you what is going to happen, which you know that you might come all the way to this wedge. Are you getting it? So if this market is actually doing that way, that means that it will definitely find a way back to these demand zones, 1-hour demand zones. If you can find a shift again on 15 minutes, take it all the way to these areas. Or it might just even continue where it wants to go. It does not have to respect structure for the lower time frame. Most times it does not respect structures. So I will end this here and I want you to watch this over and over again. This is like a training session with a big, very, very big eye opener. Why I want to be trading gold all the way from. I want to be trading gold mostly from July, August, probably maybe September, the whole of Q3. So take care and bye for now. I still remain COptionX Limited, and no matter how long it takes, we will get there. Take care and bye for now. Wishing you a happy weekend and a brand new week is about to start any moment from now. So I started this video, wow, 4 p.m. and it's about 5:30 p.m. right now. That's around 30 minutes already. So I will edit this, upload for you guys to watch, educate yourself, know your levels, don't get carried away. Trust me, trading is a 10 years marathon, not just now. Don't blow your capital on just one trade when you have more than 10,000 trades to come in the next 10 years. Okay, it's a gradual process. It's not a process you have to hurry. Not what you, even though you make all the money today, you still finish it. What if you lose all your money today and you don't have capital to trade again? So, observe risk and money management. That's the last thing I'll tell you. First of all, always look for your change of character, use of Fibonacci retracement levels. Always look at your RSI. If it's overbought or oversold already, it's oversold. Or it's oversold on your folly structures already. If it's not oversold, it's in the bullish territory. Don't play with it. Wait for it to be overbought, oversold, or overbought before you sell. If it's oversold before you sell, if it's overbought before you buy, it will always help you a lot in your trading journey. Because if you are buying from here, you know what you want to make. Depending on what are you seeing on the folly chart again. Always look for what divergence. The divergence is even happening on the folly chart here, which is a bullish reversal pattern also. So aside from my shock, I use my divergence also. So I just discovered something now. When the buy momentum is going up, the price is coming down, it's telling you that the market is about to reverse. So if you are bought from 1,900, you would have made about 200 pips to the upside using this divergence. So a lot of trade divergence. There are a lot of things in this market telling you what to do. Learn it first before you start trading. Because you would have seen the divergence, you would have also seen this shift around here happening right now, knowing that this market will actually do what? Buy from 1,900, 1,940. They have made a quick 1 week 400 pips to the upside, depending on your capital and your risk reward ratio. So conclusively, again, I needed to add this, and after everything I've talked about right now, there was one particular thing we did not add. And it's my 20 and 50 EMA, and I use that as a confirmation, a bullish and a bearish case confirmation. So from my so if I can use only the 20 EMA from my, you can see I've been using this 20 EMA and it has been working perfectly on the gold daily charts. So if I should probably go to another gold, okay, let me just leave my levels in it. As you can see gold from the downside, look at the 20 EMA. When we had a bullish break above the 20 EMA, that was when we started trending. So when it touches the 20 EMA, what happened? Trended, came back to touch again. So it has been a kind of support and resistance. And look at here, when we broke the 20 EMA again with a very good break, what happened? We were underneath it. So try breaking, don't break. Oh, finally broke again. So you can see all this large candle breaking. Whenever you see a candle break above 20 EMA like that, know that the price is going to be above that 20 EMA. So always wait for the touch, then take all of the 200 pips. See, touching, 200 pips until you broke it again here. So since we broke it down there again, we are underneath it, as you can see. And right now, what is happening? We are still underneath that 20 EMA. So that 20 EMA is even aligning perfectly with our structure that I'm telling you that we must break this part of the structure. I'm talking about that we must break before the market will do what? Pass to the inside. So if I should take all these off, so there's not much to delete. So from there now, what are you saying next? So my 20 EMA is going to guide me also if I really going to break and continue this market in the upside, because once we come back to our 20 EMA, there's another strategy I'm giving you again. So I think I've given up more than 5 to 6 to 7 strategies altogether how I trade the market. RSI, divergence, 20 EMA, break and retest of all our chart patterns. We are already having, okay, look at the daily right now. What can you see? This is a morning star, which is a bullish reversal pattern on the daily, and on the 1 hour it's giving us what's it called? What do you call what it gave us on the 1 hour chart? It gave us a head and shoulders pattern, reversal pattern on the 1 hour. If you go to the 4 hour chart, you still see that probably gives us something else again. So we are here, not like it's running away. So on the 4 hour chart, we start seeing a lot of things happening. Switch to the upside, probably maybe to the 2 hour chart. Maybe want to daily chart and take this off. So the market will always tell you, wait for the market to come to you, wait for your bullish signals to come to you, wait for your bearish signals to come to you. Whenever it wants to break, you see breaking perfectly well with candles. And this market was coming down big with big candles. You don't expect that this particular place will hold. So the behavior itself will tell you after breaking down from the 20 EMA what happened. So this is another 20 EMA strategy I'm adding at the back of this video right now. So if you're ever scared, what is happening? Probably you have been selling from all the way from this break, $2,000 area. When it comes to this place and you are seeing BB candles breaking above it again, the way it did here, but overall, what I tell you about gold, gold usually does what? Two things, M patterns or W patterns. It don't fail. So I'm definitely expecting between now and Thursday that those market, what's it called? Those large fundamentals, the non-farm payroll, the what's it called? The ADP non-farm payroll, the interest rate decisions, the job opening, and those big fundamentals you'll be seeing to come and attack 20 EMA and come down. Maybe couldn't break it, do an M pattern or a W pattern, sorry, a W pattern, fake out some kind of, or find something like this, I guess, or probably come and do a fake out this downside, then find a way to shift and continue, or do this fake out here, let the fake out happen here, I guess in it, let the fake out happen here, then break and retest and continue going. So it's still what an M pattern, break and retest and continuation. If you go to the 1 minute time frame, you'll find all this M pattern in low. So you want to scalp your lower time frame, like 5 minutes time frame, just concentrate on finding those M pattern, fake out and break and retest, and reclaiming that structures and continuation, probably using your 20 EMA or 5 EMA on the lowest time frame. But this is what I use on my higher time frames. I'm done with the video. I'm even editing already, but I forgot I did not add this 20 EMA pattern. So that's why I'm adding it right now. Adding 20 EMA patterns. So if I can delete everything, you see the 20 EMA. I guess it's coming, buy and wait until it breaks the 20 EMA, then sell. Start selling here. Use the 200 pips. You see that it was attacking 20 EMA and is here to attack the 20 EMA at $19.34 area, which corresponds with all these previous broken structures. So if you find this and you are seeing a bearish candlestick pattern on the daily, you can take a trade using your shifts on your own high time frame. Again, in this area, so your 30 minutes time frame, then take it down all the way to this next demand zone or this. You can take all these things up. You can see a gap here. Is it coming back to fill this gap? We don't know, because this was our last area of value. I can go back to. So bullish or bearish case scenario, 20 EMA is on that thing that will guide you again in your trading journey. So I will end this here and add to the back of that video to give you more confidences, to make you understand how the market actually works. Because if I even bring the 50 EMA in, it's telling me that gold is switching here, because look at on that strategy, when the 20 crosses the 50, becomes bullish. When the 20 crosses the 50, to the downside becomes bearish. When it crosses to the upside, it becomes bullish. And this particular strategy has been working with the 20 and 50 EMA for a very long time. When it crosses, what happened? It became bullish. It became almost bearish, but when it crosses again, it goes with bullish signal again. So use a 20 and the other 20, 50 EMA use along all my confirmations when I'm trading any assets. I use 20 and 50 EMA, use 20 EMA to guide me. So if I wake up tomorrow and I see that I've entered the trade all the way from 2020 like I did, from 2020 from this breakdown like I did, and I was not finding that we came back to 1980 and 20 EMA, see what 20 EMA did. Okay. So that I brought a bearish vibe. That's a bearish engulfing candle that happened there. So what happened? We came back to the 20 EMA again, then broke down, came back to touch it 2 times again, keep breaking down. And the last time we saw it was this evening star that happened that broke us all the way down. So what is happening? Are you guys know? So we might come back here to the 20 EMA. Once you are seeing any bearish vibe, trust me, take it down. Take it down. That's how it looks. So this is the 20 EMA itself. So I will just add this at the back of that video. Probably if I can put it in the middle of the video, I will also put it. But anyway, this is just my footprint I leave for you guys to help you, especially non-professional traders and sometimes some professional traders that just trade support resistance without looking at the entire market itself. Really, so I will end this here and add to that video. So take care. Bye. 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 Bye.